So I know you and Jonathan were talking about the analog between today and 2000 and 2002. And between 2000 and 2002, Scott, the NASDAQ had 14 days where it was up 6% or more. And one would have been wrong all 14 times that the bottom was in. And with the data that I look at from last week, there was a tremendous amount of short covering happening on top of longs buying. And if you look at Goldman has a basket of the most shorted stocks, and on Thursday, that was up 11%. I mean, in one day, a basket of names up 11%. So I think at this point, we are in this short covering mode where when inflation, we get that one read that was slightly better than expected, and the shorts come in and cover. But I don't think we will have a durable rally in these kind of names anytime soon.
Wow. I mean, you sound pretty pessimistic. Why do you still hold the position?
That's a good question. I mean, I'm more realistic. You know, I'm realistic about where we are in the market cycle. I mean, 95% of our portfolio is moving in the right direction. And when we originally made this investment back in, March of 2020, we wanted this to be our, venture capital type exposure, but with the liquidity and rigor of the public markets. And so, we haven't given up on that type of exposure, but it's definitely painful. We've talked about this before. It's just not fun. And I don't think, once again, that inflation is all of a sudden going to go from 7.7 to 3, because that's not how it works. And so I think ultimately these names have bounced, like ARKK has bounced around 36 to 40, 36 to 45, and I think that continues for a while. So we'll see what happens over the next few months. If I think that inflation and interest rates are going to stay at this level for a long period of time, we wouldn't continue to hold the position.
Are there any names within here that you would strip out and own individually rather than in the basket form?
Yeah, well, I think, I try not to armchair quarterback it. I can probably point out the names I wouldn't own easier than the ones I would. I mean, there's a lot of biotech in there. I mean, I've never been a fan of Robinhood, and, she maintains that in the portfolio. I'm just not a believer in the strategy and not a believer in the space. And so, but once again, I'm not going to armchair quarterback her. We hired her and her team to own that basket because I don't have the ability and I get too biased on these. I mean, Tesla's been, I think it's the number 2 name right now. Zoom is number 1. Tesla in March of 2020, I think was about $40. So I wouldn't have had the ability to buy it back then, and it's had like what, 5-fold from there, at least 5 or 6-fold. So I would stick on kicking out Robinhood and some of the other names that I don't agree with. But if I'm going to have an active manager, I have to buy the basket and just either stick with it or sell the whole position.
I hear you. I appreciate it, Bryn. Thank you. That's Bryn Talkington joining us from Requisite Capital.